Original author, Vitalie Postolache A semaphore signal indicator based in the idea from 325 Golden Strategies collection. Strategy principle by the closing average calculated by the X-day period should be higher than the similar average Y days ago. The closing price should be lower than the closing price Y days ago. The closing price should be higher than the closing price Y X days ago. If all three conditions are met, then you should buy at the next day opening. The closing price should be lower than the opening price bearish candlestick. Sell. The closing average calculated by the X-day period should be lower than the similar average Y days ago. The closing price should be higher than the closing price Y days ago. The closing price should be lower than the closing price Y X days ago. The closing price should be higher than the opening price bullish candlestick. If all three conditions are met, then you should sell at the next day opening. For example, if 20 and Y3, then the 20-day closing average should be higher for buying than the average calculated 3 days ago. It simply means that the 20-day closing average goes up. Next, today's closing price should be lower than the closing price 3 days ago. It helps to determine if there would be a pullback before entering the market. Finally, the price should also be higher than 23 days ago even if it is lower than 3 days ago. That way we check for an increasing moving average. The method will work until a turn signal appears or the market goes too far against the position without a turn signal. Fake 1. The Simple Trading System Indicator 12,580 Best MetaTrader Indicators Profitable Expert Advisors.